what's so ironic is that they're not going to go anywhere. There's this loophole in the way that Facebook runs their business such that they don't charge influencers and brand partners for using their platforms. They can come on for free. They can use the platform to develop their image and their following. And then brands basically can use Instagram and Facebook as communication tools instead of as advertising tools. And I mean that in that they don't actually pay or have to pay Facebook any money. So some brands, for example, my sources are telling me they have to get about 5x ROI to make Instagram worthwhile. Now they're getting 2. So they're basically paying their best they're paying their best influencers who are on there for free instead, 0 to very little money to get a much better ROI right now.
Right. So is this the new game plan, the new business model for Facebook then? And we've seen them lean into audio and that creator economy.
Yeah, I think it absolutely has to be. One interesting thing is 2 years ago, I actually remembered this morning when you asked me to come on the show, I wrote a piece on influencers and how when Facebook hid likes, it might make it more difficult for them to show their return on investment to their brand partners who they work with. Turns out they're still on the platform, but I go on Instagram like 80 times a day, call it research, but I noticed that they're asking a question now about whether people like that. Do you like having your likes hidden? It turns out I did speak with a psych expert 2 years ago who said that people tend to like what's already been liked. So if you can't see how many people have liked something, you might be likely to just pass by it. If you see that it has thousands of likes, you might be more intrigued by it, want to like it yourself, show people that you too, it's sort of like a crowd thing. So it could be just that they're going to lean more into influencers. They could charge them easily at this point. Honestly, influencers make their whole business on Facebook. So if they charge them a nominal fee even, they have millions of influencers, they could do quite well.
Yeah, or maybe they'll flee to YouTube or one of these other spots, which, Natasha, brings us to the issue of antitrust. And, all of these companies are getting called monopolies, but I can't help but notice Facebook years ago pressured Google because Facebook isn't searchable by Google's search engine. Now, Apple's pressuring Facebook by cutting off some ad targeting capabilities. And we're just talking to Microsoft, which is pressuring Apple on the App Store margins, I think. They say they're not going to take this 30% take, and they're pushing to take over gaming. And as a pretty big company, I think Apple's got to pay attention. So does this shift this narrative that all these companies are monopolies and can't be stopped by anything but increased regulation?
Well, I think, they're going to have an impact on each other, given how much power they all yield, both, in mass and then as individual firms. And now you have regulators stepping in and saying, OK, this is monopoly power. I really don't think there's any question about that in terms of how much they have right now. And so they're going to be hitting up against these barriers of privacy concerns coming to the fore, influencing their business models, more regulation coming to the fore, and this antitrust action. And you could look at the antitrust action and say, okay, well, this is just political jockeying. But the fact is that there's a lot of pressure to address the overconcentration of power in the tech sector because it's having real world consequences on our information flows, on our privacy, on our democracy. And frankly, it's pretty overdue. If you look at antitrust action in this country, there is a long history of protecting free market competition and innovation over the last century. But we've been in this period of not a lot of antitrust action because of the rise of the Chicago School of Economics in the 70s and this idea, almost a dogma, that markets would simply self-correct. Well,
but Natasha,
they don't.
Maybe in a way they are, though, is what I'm pursuing here. I kind of want to push you on this.
Yeah.
I notice all these big companies, in this case, we're talking about Apple making a privacy move that's having a real impact on Facebook and its ecosystem. Maybe they are self-correcting in a way, and the focus shouldn't be so much on can they do M&A or do they have to be broken up, but maybe making laws that actually set rules of the road in a digital economy. Congress is more comfortable, I think, telling companies what they can't do than making smart laws, it seems.
Yeah, I think that's right. I think they're even though it feels like we've been in this information economy for decades, this is new territory. And so what are the rules of the road? How can you prevent this kind of overconcentration of power? And because there has been so much political concern. You're seeing the companies starting to say, okay, well, we need to address privacy. We need to address these issues because we don't want to be regulated. And as investors, what we always want is self-regulation, right? That they don't get into problems to begin with, but if you've got Zuckerberg saying, well, it's better to buy than compete, you're going to end up with just this consolidation of power. But I do think what you're seeing right now is they're trying to be more responsible and take actions that protect consumers and give them, enable them to continue with this social license to operate.